Okay, guys, here back with you on the 11th of July here on a Thursday, where we're looking at traditional assets. So, kind of an interesting polling result. One of you guys posted up a request for stocks, equities that I'd be interested in shorting. It's kind of interesting. I don't do it often here, but there is a trade here that I've had my eye on. So, of course, so I think Powell is still speaking, but so with Powell pretty much telegraphing this rate cut, we've got 2 weeks. So essentially, it's the end of the month. I think it's the last day of the month where we've got the FOMC meeting, and we'll get that decision from them. I think it's being fairly well telegraphed that they intend to cut rates. So immediately you think to bank stocks, right? The interest rates are going down. That's usually negative for bank earnings. So I couldn't help but notice that PNC here had an interesting setup. And I've kind of been watching this. So off of it here, so I've just got this is a 3-day chart here, right? We always want to look long-term with equities. So here's our 09. 09 as we've rallied up here. So there's a fairly clean Elliott count in here. We can get a 1, 2, 3 subdivisions, quite nice, right? 1, 2, 3, 4, pretty good kick in the 5. And it's technical, so we can look at it this way. So length of the 1 projected from the 2, we get just to 100%. But interestingly, note here, per the shift pitchfork that I have on this, we don't make the median line, right? You would have been anticipating that. We get the 100, so we have a candidate, and the subdivision supports it. For the 3, we got ABC down for the 4, but we don't get our 80% off of this corner pocket until we get right here, right? And then we get to the upper edge. Now I've got the 1, 2, 5 that seems to be framing here on both sides as we got through the parallels, the upper and lower parallels here, but the 1, 2, 5 seems to be supporting it here. So, and then as we use it as a sliding parallel, looks pretty good. So 1, 2, 3, that qualifies. Now note up here, if I do the same thing, but I take the length of the 1 and I project it from the proposed 4, get that right on that. If I pull this over, you see we're just a few ticks shy of the 1618. Like common for the length of the 1 projected for the 4 for an extension in the 5 that we get here. Well, pretty close, right? So that gets me thinking, oh, perhaps we've got something here. So now the correction here is it's a bit choppy. But you can see kind of the gap here. So I'm going to go from the 3-day down to the daily, and we'll take a look in here. So this is a bit ugly, but I think you can make a pretty strong case for this as a motive wave. So we get the kind of the funky 1, 2, 3, very deep 4, but it's technical. So typically in a diagonal, we're looking for something technical between the start of the 1, the pivot of the 3. Looking at the 450 is ideal. Now we're not spot on here, but it's pretty good coming down here. So we get almost third target here. So I just keep testing these, looking, what's the algo done last, and it looks like they used a secondary pivot. If I can get this hot here, looks like they used a secondary pivot here to get this spot on. So I think we have to use that as we can't use that. We're using this as either the ABC of the 1 or there is a little 1, 2, 3. So actually that would be the 4 of the 1, 2. So it's a pivot that was used. So we can look here. Right, we can see it's right to the 50. Well, see here. Can you see that? I know it's probably hard to see. From the 50, we go right to target. Do you see that? All right, so they used this pivot, which is why I want to look there to see if it was used again. So this pivot is in play. We know an algorithm used it. So if I come down to it's already there. So I look here. Now I go from the 3. All right, so it's tempting. I was considering this as the 1, 2, but then you don't get a diagonal. And I think this is more likely a diagonal given the steepness of that 4. So I stay with the count. Remember, an algorithm doesn't care about the Elliott count. But note, we come up right to golden zone. Oh, shit, hang on. If you can see this. So we literally tap the golden zone right to target. All right, now, no surprise here. As we get target, now look at the reaction. All right, so we know algos are in here, and they're playing. There's no question they're in here playing ball. Okay, so let's get this tightened up just a hair. think I was off just by a bit. All right, as you change time frames, you often have to come back and tighten these up. Am I right there? Good. Okay, now here we are at the corner. So now note what's happening here. We've got from this corner, it looks like we want to get back to the median line, but we're being denied. So what's denying it? Well, from the pivot here to the low, we know this has been technical. So, right, anybody surprised by that? So what do we run into? Golden zone. So you've got a candidate here for this to play as an A into the golden corner, right? We've got our target down here for a C. So this is a reasonable candidate. So this is, that's as good as they get. So if we can take the length of this projection from here, now we'd be putting together a little confluence zone. So if I fatten this up here to include both the algo target and 100% the length of the proposed A projected from what at the moment here, if we're going to stay in this golden corner, we've got a nice fat target down here. This is pretty, so we're on a daily chart. So we're looking here from 142. I'll just use the algo target here. That would put us at 95. So this is a pretty good rip that's potentially there. Now you look at it here. So there's a little strength today. So we're, if I go, let's go down to the 4 hour here. Trying to get this here. I guess I can get this off now, having made that point. So we're getting a little push up here. So there's certainly there's room here because it looks like you can get a 1, 2. Do we have a 3? Maybe a little 4. Maybe there's a little more juice in this. So it makes you look at that and think, if it's going to break the corner. So you do absolutely have a golden corner here. Right, so that trade can be put on right now because you've gone into the golden zone. Now, the caveat always with any corner pocket is that the pivot must hold to maintain that 80%. But you can't help but notice the possibility here that if this is going to break the golden zone and go higher, right? We've got the median line up here. We've got the 786. Well, let's see. We're going to get earnings fairly soon, so let's put this. There's July 19th. Okay, so if we break with a return to the median line, okay, let's get that up there. Okay, so if we're going to get an A, B, and we're going to get a bigger push here, if we're going to go 1, 2, 3, 4, and there's another kick in the 5, if we break the golden zone, well, of course, from an Elliott perspective, it doesn't invalidate the idea that we've got an A, B going in. Certainly, they can go that high. We do have the technical confluence here of the potential here, and I'm going to show you a few other things. So what I see here is a solid short setup here with very reasonable risk reward because there's only so much. So if you're taking it now off of the golden corner, all right? So we've had the push into the golden zone, but it does look like there very well could be one more little push up here. Now, take note here. We've got earnings coming on the 19th of this month. So roughly 8 days until we have earnings. So it's not uncommon to see a little push up going into earnings. So, it's tempting because we're sitting at the golden zone. So we know that's going to be defended by an algorithm here. So we've got the dominant, right? We know there's going to be defense being played there. So I would do this with options. So I'd buy right at the money. But you're going to need so looking out here, you're going to need to buy something, I don't like to buy options with less than 6 months. So if you're looking for that play here off of the golden corner here, I'd buy an option right at the money or slightly in the money. And so you buy the 140 put. Now the market's been since this low, we've been pushing higher. So the call premium, well, with earnings a week away, the premiums will be a bit fat either way. So you're making a directional play, but your puts are going to be slightly better priced because the market's been going up, right? So people pay less for them. You'll pay less for the put here going into that. So what I would do is I might put a small position on here for the potential golden corner, but recognizing that if there's one more little push up here to get to the median line, that could set it up. So if I would split my position, I'd put half on here, right, of the put. So whether you're doing 1, 5, 10, 20, whatever it may be, I would put half on now. But knowing that I've got earnings coming, if there's another push up here, I would have a clear exit. So my exit would be a break of both the median line and the 786. Not that it couldn't still be the B wave, but there's got to be a okay, I was wrong about my analysis point here. So even though you'd have plenty of time left in that option, that is the single biggest mistake that option buyers make. They stay too long. The market, because it's easy to do this. It's easy to think, wow, okay, well, we went up here, we went a little high. Well, I know a B wave can go a little higher. Maybe we'll get an expanded B wave here. Maybe we'll go to the 887. Oh, maybe we'll get an expansion, right? So you want to have an absolute spot where you just are committed to, I'm going to get out and take the modest loss here. If this happens relatively quickly, I should say, you'll still have plenty of time left in that option. Now we'll have moved away, but you're at 152 here, so yeah, you're going to take a loss on that. Now, if this happens quickly, the sooner this happens, the less severe the loss, because the option will have plenty of time left, and you won't have had severe time decay. But I think this is reasonable here off of the golden corner for your initial bite, knowing that if it comes up here and kicks to that median line, I'd take the second position. If we break the 786, I'd get out of everything. That's what I do. And then the only other thing I point out here is that this you can see it. This is so technical. It's just nuts. Well, it shouldn't surprise you, right? It's a bank stock. So the first push here, note how consistent this is. So from the low, what I just showed you guys, from the last pivot, we went algo target to the tick on the low. Well, right, they don't stop, right? They just keep going. So here we go. So we go from this, we get down to the 50, right? Algo target to the tick. This is to the tick, that's to the tick. All right? All right. So of course it just keeps going. Right? It's just the same thing over and over and over again. All right, now we use that low. Right here, we come down. We don't quite make, looks like the parallel. You can't even see the median line, or the target. All right, so here's we don't quite make the 618, but we're right, we get a little three wave, or we're just shy of the 618. We go up, we've already hit the target. Now, again, within that, right? Remember, it's happening on multiple time frames every day, whether we're looking at the 1 minute, 1 month. Always there, right? So here's golden zone, second target to the tick. So this is so algo driven, it's just nuts. I don't know how does it. So therefore, thus the idea that I'm now into another golden zone here. I've got a golden corner pocket. How are you not taking that trade? If you're interested in shorting equities, this is about as juicy as they get. I mean, we can just see the algo tracks all the way at multiple degrees. We just tagged, we've got a huge confluence here. Well, on the smaller, we've got the second. On the larger, we've already tagged the first target. And you're in the golden zone from the top. I mean, this is, that's trade to seriously consider. But you look at it and you go, oh shit, that would be so much better if we didn't have earnings coming in a week because of surprise. So therefore I would suggest you do it in options. So if this is going to stay a little bit stronger going to options, if we're going to break that, you're going to lose the sell side algo. Remember that. You're going to lose, which is the negative here. So if you could be even more disciplined with your exit strategy, if we break the 65, you're going to bail simply because you're losing the sell side algo. And we can see, right, how obscenely they dominate the price action in here. You could take the Elliott wave off of this and just work with the algo plays, right? That's what's happening in here. The waves just get shaped by what the algorithms are doing. So you could take this here and a break of the 65, which is at 44.29, and you're out. So very, very low risk trade to take it off of that golden corner. But it's hard not to notice that if you pull back out to the daily, that you could have one more push up to tag the median line again. Right? We know this was a perfect technical pivot. Now note here, if we're going to come down, right, why would you anticipate that it wasn't going to stay technical? You wouldn't. So the ultra conservative, break the 65, out of the option. Right? You can keep it simple, buy the put. Simple. But give yourself 6 months so that if it meanders here, then when we get the reaction from earnings, you might give this a little bit of leeway. I wouldn't give it too much here. If you have a little volatility on earnings day, a little push by, maybe to run some stops. But if it's going to get up here, maybe that's where you bail. It's just the individual trader's choice, what your risk tolerance is. This is very tight. So you'd be buying the 140, exit at the 142. Nothing wrong with that, right? You're trying to get the absolute corner. You're trying truly getting the corner pocket. All right, so there's one to keep an eye on. All right, the reason not to stay here is because of the loss of the sell side algo. So there you go, right? One to be watching. All right, guys, probably do it for today. All right, talk to you later.